On July 22, 2026, Tesla handed Wall Street the best quarter in company history. Record revenue, record deliveries, the kind of quarter that's supposed to send a stock into orbit. It sent this one off a cliff instead. In the next 24 hours, investors wiped out more than $140 billion in Tesla's market value. The stock fell almost 15% in a single day, one of the worst trading days the company has ever logged. Sell more cars than you ever have and still look like you're dying? How does that even happen? Part of the answer was sitting right there in the same report, buried in the one section almost nobody covered: Elon Musk's robotaxi fleet. He promised hundreds of driverless cars, covering half of America by the end of 2025. Wait until you hear the real number. The Golden Age. Rewind a few years, and Tesla wasn't a car company, it was a religion. Elon Musk was the Messiah chief executive officer, the man who was going to kill the gas engine, colonize Mars on the side, and make everyone who believed in him rich. The stock split twice in about a year, and the price just kept climbing anyway, like it never got the memo that stocks are supposed to obey gravity. People lined up outside stores to test drive a car that wasn't even finished. Analysts who questioned any of it got laughed off financial television because the numbers kept proving them wrong, quarter after quarter after quarter. For a while, Tesla owned electric vehicles, the way Apple owns the smartphone. No real competition, no real doubt. That empire didn't collapse overnight. It cracked slowly, for years, while the stock price kept lying about it. Here's exactly where the crack started. The crown slips. For the 2 straight years running, Tesla sold fewer cars than the year before. That had never happened before in the company's history, not once. Then it happened in 2024, and it happened again in 2025. Deliveries slid from 1.79 million vehicles down to 1.64 million. That's not a dip, that's a crown falling off. And someone was standing right there to grab it. BYD, the Chinese automaker Elon Musk once laughed at on live television and called a company without a great product, sold more than 2.25 million fully electric vehicles that same year, over 600,000 more than Tesla. For the first time in more than a decade, Tesla wasn't the biggest electric automaker on Earth. BYD didn't get there by luck. It's been flooding Europe and Southeast Asia with cheap, well-built electric vehicles, while Tesla kept selling the same 4 models it's had for years. Europe is where the bleeding is worst. Tesla's registrations fell for 13 straight months in a row. Norway, once one of its strongest markets on the entire continent, saw sales collapse 88% in a single month. France dropped 42%. Tesla's overall share of the European Union market, which had peaked near 3%, fell under 1%. Some of that bounced back a month later, but a bounce off the floor still isn't a comeback. Back home, the story rhymes. United States sales fell more than 8% in the first quarter of 2026, Tesla's 3rd straight year of first quarter declines, and its worst quarterly total since late 2021. And here's the part that should really worry Tesla. Look at what's actually carrying that number. The Model Y, up 22%, now makes up 67% of every Tesla sold in America. One car doing all the heavy lifting. Meanwhile, the Model 3, the car that was supposed to bring electric vehicles to the masses, dropped almost 40%. And the Cybertruck, the truck Musk once promised would sell 250,000 units a year, moved just over 3,500 units that quarter, down 45%. A chunk of even those sales reportedly went to Musk's own companies, SpaceX and xAI, quietly buying up unsold trucks instead of leaving them sitting on the lot. If you're new here, this channel breaks down the real stories behind the world's biggest brands, so hit subscribe if you want more of these. The sales numbers only explain half of what's going on. The other half has a name, and it's Elon Musk. The Musk problem. In January 2025, Musk made a gesture at a Trump inauguration event that a lot of people online compared to a Nazi salute. He said the comparison was wrong. It didn't matter. The damage to Tesla's brand was already done, especially in Germany, where that comparison is not thrown around lightly. Then Musk publicly backed Germany's AfD party, a party with well-documented ties to far-right extremism, in the middle of a national election. German buyers noticed immediately. Bumper stickers reading, "I bought this car before Elon went crazy," started showing up on Teslas across Germany and the United States. German auto analyst Ferdinand Dudenhofer put it bluntly, "Nobody wants to be associated with Musk anymore, but the man and the brand are basically the same thing now." Wall Street noticed too, and Wall Street doesn't usually talk like this. JP Morgan analysts, in a note slashing Tesla's delivery estimates, said they couldn't think of another moment in the entire history of the auto industry when one brand lost this much value this fast. Baird analyst Ben Callow put the quiet part out loud. Once people's cars are getting keyed or set on fire in parking lots, even buyers who couldn't care less about politics start hesitating. And that wasn't hypothetical. Tesla takedown protests hit more than 500 dealerships worldwide, from Berlin to Bristol to Brooklyn. Cars and charging stations were vandalized. Some were set on fire. One economic research paper put a number on all of it. Tesla's United States sales between October 2022 and April 2025 would have been 67 to 83% higher without what researchers called Musk's polarizing and partisan actions. Here's the twist most coverage skips entirely. Musk didn't just get swept up in this storm by accident. He helped build part of it himself. Years earlier, he'd personally and repeatedly pushed to kill the federal electric vehicle tax credit, arguing it would devastate Tesla's smaller rivals far more than it would ever hurt Tesla. He got exactly what he asked for. The $7,500 credit expired on September 30th, 2025. Buyers rushed to beat the deadline, which briefly inflated sales across the entire industry, and then demand fell off a cliff right behind it, Tesla included. Musk bet that killing the subsidy would clear the field for him. Instead, it helped clear out a chunk of his own sales too. So the car business was taking hits from two directions at once. Tesla needed a new story to sell investors, and it had one ready: robotaxis. The robotaxi that isn't. In July 2025, on an earnings call, Musk told investors he believed Tesla's robotaxi service would probably cover half the population of the United States by the end of the year. 3 months later, he raised the stakes, promising 500 or more robotaxis in the Austin area alone by December 31st. By November, with the deadline staring him down, he quietly cut that number to about 60. He still missed it. So what's actually out there? In May 2026, Texas forced every company running driverless cars to register its fleet, and the real numbers finally became public. Tesla had 42 vehicles authorized to run driverless in the entire state. Waymo had 577, not double, not triple, 13 times more. And 42 is the generous number, because that's every registered vehicle, not every vehicle actually driving without a safety monitor on any given day. Trackers following the program in real time watched that working number bounce around week to week, sometimes near 30, sometimes down to 14. Right before Tesla's second quarter 2026 earnings call, it stood at 21 cars total, spread across a service area Tesla now markets as the entire Austin metro, roughly 245 square miles. Do the math on that. Since the whole program launched, paying riders have logged about 2.5 million robotaxi miles, and only 380,000 of those had zero safety monitor on board. Waymo covers more ground than that in a single week. Musk's excuse is that Tesla is holding back on purpose, waiting on a major software rewrite before it scales, something he says will land in late 2026 or early 2027. Add that to a very long list of deadlines that have already come and gone. And the safety questions aren't going away either. Tesla has disclosed 22 separate crash reports to federal regulators since the Austin service began. Most were minor, mostly property damage. One sent someone to the hospital. But buried in those filings is a detail Tesla never volunteered on its own. At least 3 of those crashes happened because a remote human operator, sitting somewhere else entirely, took control of the car and drove it straight into something. A curb, a construction barricade, a tree stump. The technology built to replace human drivers is still calling humans in to save it. None of that stopped Tesla from requesting approval for 5,000 robotaxis and access to 2 major airports in Las Vegas, a city where its actual working fleet numbered around 20 cars at the time. It also launched in Miami, then announced Orlando and Tampa on the very same day it reported earnings, without saying how many cars would actually be running in either city. The map keeps getting bigger, the fleet does not. All of that costs a fortune, which brings us right back to the earnings report that kicked this whole story off. Follow the money. Here's the quarter in plain numbers. Tesla delivered 480,126 cars, a record for any second quarter, and pulled in $28.24 billion in revenue, up 26% year over year. Genuinely strong on the surface. But operating income, the actual profit from running the business, fell 57% to just $398 million. That's a 1.4% operating margin, down from 4.1% a year earlier. Your average grocery store runs a fatter margin than that. Adjusted earnings landed at 33 cents a share. Wall Street wanted 53 cents. And the cushion that usually softens a bad quarter is vanishing too. For years, Tesla made almost pure profits selling regulatory credits to other automakers scrambling to meet emissions rules. $2.76 billion of it in 2024 alone. This quarter, that number was $146 million, a 67% drop. Why? Because the same political circles Musk spent months helping build and run rolled back the exact fuel economy penalties that made those credits worth anything in the first place. Same story as the tax credit, just with different paperwork. Policy tied to Musk's own alliances kept circling back to bite his own company's profit. Meanwhile, spending is racing in the opposite direction. $5.8 billion in capital expenditures in this one quarter alone, up 142% year over year, funding new factories, artificial intelligence infrastructure, the Cybercab robotaxi line, and Optimus, the humanoid robot Musk has called a future $10 trillion business. Full-year guidance just got raised again to more than $25 billion, roughly triple what Tesla spent in all of 2025. That's the financial version of smoke and mirrors, dazzling headline numbers up front, while the actual engine running the company barely turns over underneath. All that spending, on top of weak profits, pushed free cash flow into the red, negative $1.1 billion, Tesla's first cash-burning quarter since early 2024. Here's the part that should genuinely worry investors. Tesla's reported net income of $1.11 billion leaned heavily on gains that have nothing to do with cars. About $1 billion of it came from the rising value of its SpaceX stake, plus more from its Bitcoin holdings on the side. Strip that out, and the actual business, the one that builds and sells cars, is running on fumes, while the company bets tens of billions of dollars on a technology that, as we just covered, barely exists yet at any real scale. And the stock kept falling long after that first brutal day. By the end of July 2026, shares were trading around $300, the lowest point in almost a year, down from an all-time high near $490 just 7 months earlier. This wasn't a one-day panic, it was a slow leak finally catching up all at once. Is this actually the end? So, will Tesla actually collapse? Probably not in the way that word usually means. This is a company still sitting on more than $43 billion in cash,
with an energy storage business that's genuinely booming and a services division that just posted record revenue. Nobody serious is predicting bankruptcy here. But a company collapsing and a company's story collapsing are two very different things. It's the second one that's happening here. Wall Street itself can't decide what Tesla even is. Wedbush analyst Dan Ives still has a $600 price target on the stock, betting almost the whole thing on Robotaxis and Optimus eventually paying off big. On the complete opposite end, Gordon Johnson at GLJ Research has a target as low as $19 to $25, arguing the core car business is falling apart faster than any new technology can replace it. The average target sits right around $400. When the range runs from $19 to $600 on the same stock, that's not disagreement, that's chaos. What isn't in dispute is the competition closing in. BYD isn't slowing down. It's expanding into new countries every quarter with cheaper cars and its own fast-charging tech. Chinese brands like Xiaomi have already launched vehicles built specifically to hunt the Model Y, Tesla's last remaining strong seller. Legacy automakers that spent years playing catch-up on electric vehicles have mostly closed the gap, and Tesla hasn't launched a genuinely new passenger vehicle since the Cybertruck at the end of 2023, a launch that, as we already covered, turned into one of the biggest sales disappointments in the entire industry. The most likely outcome isn't Tesla disappearing, it's Tesla becoming something smaller and stranger than what it used to be. A car company with shrinking core sales, propped up by a bet on robots and driverless cars that has so far produced a lot more announcements than actual working products. Whether that bet eventually pays off, nobody knows. Not the bulls, not the bears. What we do know for certain is this: the version of Tesla that could do no wrong is already gone. What happens to Tesla next is worth watching closely, because this was never really a story about one car company. It's a live test of whether hype alone can carry a business once the numbers stop backing it up. If you want to keep up with stories like this one, hit subscribe. We break down what's actually happening behind the headlines, not just what's in the press release. Drop a comment and tell us what you think happens to Tesla from here. Thanks for watching.